The Fed minutes to us is not as much of a surprise. Our economists do also expect the potential rate hike, and what was telling was this divergence between some of the members. And to us, it's also the divergence that we have now between the markets and the Fed, where the market is pricing no hike and even possibility of a rate cut down the road, while you have at the Fed the possibility of a rate hike. So it's really this divergence and potentially the complacency in the market that is worrying us.
Fair enough. But how do you see this complacency playing out in the near term, when there will be eventually more clarity on U.S. China trade talks, there will be eventually more clarity. And I think the summer will be busy from that perspective. There will be perhaps some clarity on what the Fed is likely to do with rates this year, and laying a timeline as well as a level for how much they hope to reduce in the balance sheet in 2019. How do you think sentiment will evolve then?
So look, more clarity is definitely would be welcome for sentiment, but we still have a lot of uncertainty, even if there is a trade truce and between the U.S. and China on the trade talk. The 1st of March and the postpone of the 1st of March deadline is almost accepted for granted by market participants. And we have seen that it's not yet a done deal. Of course, we are also leaning towards that outcome, but it's not a done deal. So even if we have this happening, there will still see, we believe, a lot of uncertainty around U.S. and China trade relationship, around IP and access to the different markets. So with that in mind, we don't think that even if we have short-term clarity coming in the coming weeks, we will not have really resolution for the long term for sentiment to be more settled this year.
Tamal, I got to ask you, are you worried about an earnings recession?
We have been not planning on an earning recession. We are quite worried about these fundamentals really slowing. We do see that earnings still have a potential to generate year-on-year growth of low single digit. So not an earning recession, but really the mixed data that we receive, and especially the slowdown that we see all over the globe, is something we will need to pay attention to, and to see whether earnings will fall further in later this year. But as of now, earnings recession is out of scope, and we are still neutral, but with a cautious stance between equity and bond allocation.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.